So I work with a lot of investors and other buyers who are wondering when the market will go back to normal, or even if there will be a buying opportunity in the future if the market crashes, or if we run across kind of a surge in foreclosures like we did after the big market increase in 2008. There were actually some forbearance agreements put in place primarily of spring of last year, 2020, because of everything that was going on in the world. So how are those playing out and what comes next? My name is Emily.Cressey with HomeSmart Real Estate here in Seattle, and the data that I am looking at from the Mortgage Bankers Association has good news on the home front if you are owning property right now. But if you're an investor looking to snap up a good deal, maybe you won't be as thrilled. It looks like we're in a pretty good shape, and the folks who had forbearance plans put in place are coming out okay on the other end. In fact, 84% of the people who entered into a forbearance payment plan on their mortgage last year because they couldn't make their payments have either completed them or are making payments as they're supposed to. That breaks down to 50% paid in full and about 30% are still working through their payments. Only 15% of those loans are actually in trouble. It's important to understand what's happening with forbearance because this could be an early indicator of a crash. Since May of last year, the number of distressed mortgages has actually decreased, with only about 5% of all mortgages nationwide in forbearance. Here in the Seattle area, we've seen such a strong buyer demand in the marketplace that homeowners have only increased their equity positions over the past year. So if someone were to be forced into a distressed sale because of a life event like a job loss, a death, a divorce, or medical bills, chances are they would still be able to easily and quickly sell their home for top dollar on the open market and not be forced into giving back their home to the bank where it would be foreclosed upon. Despite the strong real estate market, we keep hearing information in the news about how things are going to crash because forbearance is so high. And I do have these buyers asking me if they should wait to buy until the market settles down, or if they should wait to buy and maybe an investment opportunity will present itself later when the market tanks. But if you look at the data, we have no indication that home prices will substantially lessen. In 2021, all the authoritative sources of national real estate data forecast an average increase of home prices almost 6% nationwide, even though they also think interest rates will be going up a little bit over that same period. Now, some people definitely subscribe to the what goes up must go down theory, and most real estate markets are cyclical. We have not had a big market correction in Seattle, or really nationally, since the recovery in 2000 or after the 2008 crash. So there are certainly scary headlines out there saying that we're overdue for a market correction because prices have increased so quickly. However, again, if we examine the data, home prices from 2002 to 2005 leading up to the 2008 crash had an annual appreciation rate of 10%. They were shooting up. If you look at the data from the past 3 years, we see annual appreciation of home prices was only around 6%, which is drastically less and closer to the national average amount that we would expect. More importantly, this time around, we have better, more conservative underwriting on the homes that are still being purchased here in Seattle. Homes may be bid up well over asking price, but that doesn't mean they will appraise for that much. So in order to buy these hot homes at top dollar, buyers are having to put their own money into the deal. The banks will only go up to the appraised value. So if the price is higher, that means that's the buyer's money that's at stake, not the lender's. The loans are not very highly leveraged, and therefore they're more secure. So if home prices do go down, it should not force a foreclosure. We have a very different situation today than we did in 2008, and it's easy to listen to the news and get scared. Sometimes it seems like they just make their business on hype and negativity, but I like to make my business on actual facts. So if you need facts and data about the housing market, you know, that's kind of my jam. I have an economics degree and I'm happy to talk shop with you when it comes to the numbers. So hit me up and we'll dial in the data on the neighborhoods that you're looking at and see what the actual pricing trends are there, whether you're looking to buy or sell. The data always tells us what's going on. So we're here to serve, we're here to educate. Let us know how we can help. Click the link below to visit our website and we'll get you connected with exactly what you're looking for.